Hello traders, Gary Wagner here, just after 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 29th day of August, 2014, and this is the daily report for gold and silver, our weekend review. In the light of a stronger dollar and an equities markets that keeps plotting to new highs, we do have the precious metals under modest pressure this morning. Gold currently trading off roughly $1.80 to $2. Current print $12.8716, low $82.60, the high $92.70. Silver also trading nominally lower today, off about 4 cents on the day, $19.45, $19.34 on the low, and $19.73 on the high. More on silver towards the end of the show. There's no doubt we are not seeing any kind of dramatic follow-through from the rises that we saw throughout the week in gold. It is absolutely a barometer, reacts to other markets. Specifically, I'm talking about the dollar index and Standard & Poor's, which have both been on a tear. Take a look at this high that we have both here. This would be Wednesday, of course, and this today's trading day, currently up about 22 points. If we look to see the last time the dollar actually hit this kind of a high, you've really got to go back almost 1 year, this being September, in which we saw the market trading roughly at 82.72. And from there, we had a dramatic fall through October and November down to about 79. But we absolutely have found some resistance here, although at this point, it has made another stab to attempt to take these highs out. So traders, we also have the Standard & Poor's, which is currently trading again to the upside above 2,000. So it looks like it's going to close out for the week above 2,000. With that in mind, we can see that gold has been pretty resilient in the market, not really selling off a lot, in essence unchanged on the day. We have some geopolitical hotspots, the primary one right now in Ukraine and Russia, and of course a scenario that's been brewing for quite some time in Iraq as well as Syria. And so that tends to be supportive of the gold market. When we look at this, the one thing, and for those of you that watched my series Chart This, that was recorded yesterday, but really, as we look at this market, the predominant factor has got to be the fact that we have this narrowing range with a series of higher lows and a series of lower highs as we look at this market. That trend continues. Now, I can put a lot of this tightening of range on the fact that we have light volume, we have summer trading, and that should all change come Tuesday when we reopen our markets after a 3-day weekend. Another interesting observation is if we look at last week's trading, this being Friday, Thursday, Wednesday, Tuesday, Monday. So the market starts out after a sizable decline on the week prior to that Friday. We get a consistent 4 down days during the week, and then that inside trading day with a close that is higher than the open, small green candle. In other words, a counter trend to the trend that we saw as a predominant trend throughout last week's trading. Now, this week's trading, predominant trend has been up, and it ends again with a small-bodied lower closing or red candle in the market. Again, we're seeing some real resistance in the market at just below 1,300 currently, because yesterday's high was 1297, and obviously I still believe that we have support at the 1280 level based upon this bottom here. Of course, we did dip below that to a low of 73, but over the last 4 trading days have had effective closes above that point. So we talked about the support level in gold, and as I said, I really believe that 1280 should hold and be a strong level of support. I certainly don't think we're going to see new lows in the market. But in the light of the strong equities markets and a strong dollar, gold has been holding up pretty well over the week. Now, in terms of resistance, I put up a basic Fibonacci retracement. This retracement really covers this $100 rally. Our intraday high yesterday was 97. However, 93 is a 50% retracement, 90 is a 76% retracement, and that is a retracement of this shorter rally right here. So that band is providing some resistance. Market currently trading 86.87. Above that, 1305 would be our next level of resistance. Our largest level of resistance, I believe, is at 1320. So, should we see the markets firm next week? These are the various areas that we would be looking at to see how the market reacts. Now, in terms of silver itself, we did have a low yesterday of 34. We are currently pegging our support level at 1935. At the same time, I believe that we have some substantial resistance up at around 1980. That is our 61% retracement, then 2013 above that. This has been Gary Wagner, wishing you, as always, good trading. Maintain current long positions in both gold and silver. For those in the United States, I want to wish all of you a happy 3-day weekend, Labor Day weekend. We'll talk to everyone on Tuesday. Have a great weekend. Bye-bye.